Hey, welcome everybody. And what I'm looking at is the S&Ps on the weekly chart. And the reason why I'm looking at this one is because if you add the MACD, which I know a lot of people like, I'm included. If you look at this one, you will see that this histogram is coming off. And the averages up here are looking like they might want to turn over. So we are very, very extended. We are very high. No reason to short as yet, although I am intraday looking at shorting over the last couple of sessions. I'm actually short as we speak, but a very tight stop. I'm not going to give it much wriggle room. But if we start to come underneath this, start to close under this 5,200, ultimately, obviously, the big 500, 5,000, then I think this can fall back. You can see this average here, which is the 20. Let's put the 50 on there. Let's get that one off, which is miles and miles away from the averages. So we are due, at the very least, a pullback. Because if you can see on average, when we get this extended from, well, we weren't even that extended up there, and we fell right back. We were some distance up there, but we are a heck of a distance up here from the 50-day average. So it stands to reason that this market might want to pull back. Data this week, we've got US core durable goods, consumer confidence tomorrow, Bank of England minutes on Wednesday, and US GDP on Thursday. And Europe off on Friday. I think US is off on Friday. Anyway, so I'm looking for this to pull back. And like I said, if we come out of this funnel, then we could come somewhat hard. Typically, on a normal cycle, the cycle not is upside down this year. And I'll show you what I mean by that. Normally, we would come out of the gates and dip in Feb, push up. Sorry, dip in January, push up in Feb, and then pull right back in March before winding up into the summer. This year, we've just come out of the gates screaming, and we've not sat back. So that's the norm. That's what we got. And that's why I think at the moment we're so extended. Just because we're extended doesn't mean say we can pull right back, but we are extended. So moving on, let's look at the daily chart. Yeah, so again, there's the trend line high across the tops. At the moment, all the pullbacks are getting bought. So all of these tests of the channel lows have been bought up till now. And there's that average sitting very, very neatly right underpinning the whole of that price at the moment. Right, so let's have a look at the FTSE then. So FTSE pinged up, and we look as if we want to go and test that 8,000. So now this is more typical of a indices cycle where you come into the start of the year and dip. The highs in Feb are sent scurrying back down into March, And then as you come out of March, you start to wave up. So this is what the FTSE is doing is very typical of the 20-year averages for the first quarters of each year. So it's just the Dow that's gone very hectic and has been sitting up so high. So if this FTSE comes and sits down there at 7,700, then that is the most likely pullback is at 7,850. Why? Because it's such an aggressive move up on volume. Any pullback into this fib support could see this wind up to 8,050. Okay, so if we close underneath that 7,850, then I think we could ping right the way back and possibly sink lower. All right, so what do I think is going to happen? I think this is going to pull back into this 7,850, and I think this is going to march on up to 8,050. At which point, if we close underneath there, that's a great place to short. That will be my target short if we can stretch up there and close underneath. So in the meantime, I think pullbacks are still viable, but just watch out. Right, let's go into oil. So last week or so in oil has been pretty rubbish, really. It's been just moving sideways. So pushed up in January, pulled back in Feb, pushed up. We had triple witching on the, I think, 15th. So we look as if we can ping above this 8250, then I think we can get going into 85, 87. But this is struggling. This is really struggling. We've hit the buffer here at that 8250, and we're not able at the moment to get above it. So any pullback into that 50% and into this structural support here, which is 79. And so we get a nice pullback there. I think that will get the volume in, and that will get us up into 85. So I'll be really looking forward to seeing if that can dip. However, if we hold this close today in that support, any pullback to 80 is now viable. And let's see if we can get up. But it's since we climbed up here on since we hit this on the Tuesday the 19th, we've just been going sideways. We'll be dipping back. All right. So I need to stay away from oil for now until this falls back into this 79 support, unless we really start to see a lot of volume up there. Actually, volume today was quite good. Right. Let's keep on the quick look at silver. Silver's interesting. So we ran right into that December resistance at 25 or nearly 26. This is a good chart. I like this chart. If we can hold that and pull a little bit deeper back into that 24, I would, because this is, in my book, it's a 1, 2, 3 wave. We've already done a 1. So if we pull back and get another third wave into this 24 or lower, then I think we can potentially ping up So again, with this one, I would really want to see that fall back. Let's clear this chart up. I'd want to see that fall back further if we can. Otherwise, I would be looking to start to buy this 24.5. If the volume and the behavior of the chart at the moment suggests that could fall back lower. But I'm liking silver. A full-blown move back to 23.75 will be very welcome. Very welcome. Look, tell you what, let's look at this one. It's worth seeing this chart for a bit longer because it's interesting. Let's have a look at what happened. Do wish these pens were easy to work. So you can see we had a 1, 2, 3 wave move up here into December, and then we fell right back into this zone in February and March. So the last time we pinged up here, we did a decent 3 wave move. So we might end up doing a deeper pullback into 23. That's why it's worth being patient on this one to see if this can ping right the way back into that area there. In other words, a repeat of what we did here. Otherwise, if we sit up, if we're not going to get that and we start sitting up here on volume, then I will get in there and look to see if we can get 26 plus. So it's a wait and see with that one. In the meantime, let's look at this Bitcoin because this is just wild. Bitcoin is absolutely wild. How this is ever going to be any sort of real currency, I don't know. Because so we were up there at 74 nearly, pulled right the way back to 61, and now we're over 70 again, 70,000. So I would steer clear at the moment. What I think is needed is a move right back to 50. So if we do a lower high up here, and fall right back into 50, into this breakup area, I think that is where this is going to be viable. So I would steer clear and then see if that can do a significant drop. Otherwise, you just got to buy high and risk too much in my book. And let's move on to, let's look at currencies. Let's look at the euro and go quickly on to stocks. This is a huge trend line support here, as you can see. The real key line support is down there at 107. So this was shortable up here at these highs. All that area there. So you can see the head and shoulders pattern up here. Shoulder, head, shoulder, drops. Now we're getting another one. Shoulder, head, shoulder. So if we lose, this is the neckline. If we lose our footing here, this could come all the way down to 106 and lower. However, close above 108, above this average and above this 50%, then I could see that pinging up. Inflation is much more stubborn in UK, not so stubborn in Europe, and a lot less stubborn in the US. So what that means is that if this support holds and we start breaking up above this 109, this could ping higher back into this area here. Yeah, this is if this holds, this is huge. Three touches, and we can't break through that, then this is becoming a rock solid trend line. So push above that 109 could make that really fly. Right, let's look at stocks. Let's get an update on the miners. So since I push into 22, Pan African is really struggling with this. We're back into 20. So if that's a 1, 2, 3 wave correction and we hold this 19, 20 area here, this could climb back up and go to 23, 25. So 22 is turning out to be a good exit at the moment. Um, could easily come back to 19. If we hold 19, that could get a nice next leg. Otherwise, sentiment, that's already pulled back and is holding, looking like it might want to do another leg up. Like rock, right. Yeah, these basic material stocks like Inchcape and Rio and the others, they look great to me. Let me just find them. Hang on. Yeah, so I think any pullback into 48 and a half, 48, I think that's viable. A lot of volume. We may not see that. It's very, very big. We're under the 50-day average though, so we need to be careful on this. Um, if we see 48, I think that is a great place to buy. Let's have a look at the others. Man Group. Let's have a look at Anglo American. Yeah, see, all the commodity related stocks are looking good. Let's have a look at copper FCX. Wow, huge gap down there at 40, 50. A very gappy stock, actually. Um, so Rio we looked at, let's look at the other Anglo and BlackRock. I like it. I like it. It's built. It looks like it's building. We've got to, for this to really get going, that's got to close above 22. At the moment, we're just pulling back. So we had the big downdraft here, and all pullbacks at the moment into that resistance are getting sold into at the moment. Or, well, we're not breaching this. So we might see a deeper pullback here. Might see a deeper pullback into 17, 18, but otherwise it looks good. Lows under 18 and that could break the lows. Um, I'm not sure which black you look at the main BlackRock, Patrick, or you look is this what you're looking at? No, you're saying had a big multi-asset conservative. Okay. No, may struggle to find that, so I'll move on for now. Um, yeah, but these anything commodity, I still think we are in the early stages of the next leg up in the commodity cycle. So hence my let's look at the wheat. I didn't look at the wheat, did I? So wheat has been pushing higher. So we saw 575 today. So if we stay on the upside of this channel, I think we'll start pushing for $6, 6.50. Dip back under 5.5, and then we could come right back down again to $5. Um, volumes have been picking up. We've seen some decent pushes since these lows of 5. I got in too early on this one. Very frustrating. Um, but let's see if I can make something of this. I mean, for me, I'm looking to hold this into the summer. So I'm looking to hold this for 2, 3+ months if it behaves and if the volumes pick up and if we start crushing these resistance levels. Okay, all right, back to stocks. Um, right, the other ones I want to look at. Let's look at healthcare for a second. Glaxo, Mobico. Okay, I'll have a look at that in a second. Glaxo, all the pullbacks are holding very well. Volumes are very handsome. Looks as if we can go to 18. BMY I like. Volumes are picking up. It's holding this key area. As long as we don't close under 51, I can see that recovering. AstraZeneca, pullbacks on that one in my book are viable. 103. Let's see if we can see some volume and pick up into these 23 highs. Now the other one, well, let's have a look at this MOBIC. Why do you like this one? It's quite a light. This is a very lightly trade. Is this AIM? I've looked at it before because it's all marked up. Right. This is a very lightly traded stock, but you can get stuck in these if you're not careful. If they go the wrong way, you can really get hit. Yeah, I'm just in this volatility we've got in this day and age. I don't tend to bother too much with these. Right, so we've got 3 touches of this trend line and we touched that today at the low. Um, it's not convincing to me, not convincing. I am steering clear of these lightly traded stuff. But if we come back to 65 tomorrow and hold, and we ultimately close above 73, then yes, I can see this climbing back. I can see this going to 103. If it can really get going, 150, 160. But if we close underneath 64, 63, 64, I can see that going back to 50. I purely on volume alone, and the fact is AIM, I don't like it. But if you're taking a punt on a low price, with a tight stop, then yeah, give it a go. But it's not for me. The other one I want to look at Sabre Insurance. Right, this is already running. Um, if this pulls back to 165 or lower and holds, this is a likely trade stock as well. Yeah, that's very lightly traded. But if that retests that support, 150, 165 on Sabre, I think that can go higher. 220 is what the brokers are looking at. I'm looking at it because it came up on a broker scan. PAY. Yes, another relatively thinly traded stock. Right, so we're sitting on a lot of support. Um, the brokers think this can break up, and so if we hold this apex, we hold this 480, there is the potential for this to go to £6 and possibly £7. Is that a bull flag? Yes, it could well be. Huge amount of support down here. Very interesting chart pattern. If we can start to climb above, you know what? I would sit tight on this one and just wait and see if we can close above £495. I would be patient and pay a higher price rather than Rolls-Royce. God, blimey, doesn't like to sit back at the moment. Yeah, literally flying. Now to think that was down there at 68p and now it look as if we can head for £5. Um, it starts to look shaky and then they just push it up. Incredible. Very tough to get into. 395, if that pulls back to 395 or 370. If it has a bad day and dips, that's viable. But very tough to manage once they get in. I want to look at Vodafone. A lot of talk and action around Vodafone. Yeah, and I think this is looking very interesting again. I think this 65, 67 is getting bought. Volume's coming in. If we close above 70, 75, I can see this pinging back. Notice how um, notice how when we broke that support, it pinged back up. This is very bullish behavior to me. Any market, the commodities tend to do this. In fact, wheat's just done it. This is a similar pattern to wheat. Wheat was trolling lower. Looked as if it's going to pick up, then it broke support, and then it pinged up. So if this holds, I think Vodafone could easily go back to 75 and maybe more. Maybe reclaim this 85 £1 slot. But this is the kind of stocks and chart patterns I like because they're solid, they're boring, they've got solid balance sheets, they've got significant volumes, they're more technical, whereas your Mobico and your what was the other one I was looking at? Even Sabre, they're low volume, much less technical and more temperamental. But you know, the boring stocks like this one, of course, I'm going to come on to BT. I liked your comments about BT. Yes, this is I think this is potentially building as well. You've got these three touches underneath. We can't get through this grey area is here because we had this big bar on the 1st of Feb. So if we can get back above 110, I think we'll see 118, 120 pretty quick. But if we can't get through that 110, then we could come back all the way back to the lows. But the volume is building. Let's look at the weekly. So if you go back to the weekly, back in December 22, we were down here and we went up to 150. We were around this point in December 23. We went up to 136. And way back here, obviously in post-COVID, we went up to 180. So we have a significant buy signal there on the 4th of March on this weekly chart, and we're sitting in that zone still. So that's the reason why it's this chart behavior on the 4th of March that's got me interested in BT. But yes, it is. It's a slug. It's slow. But this is a very good. This is what I call this is a value trade where the PE ratio is 5 for a cash generating stock that's vulnerable to takeovers with stakes being built in this one from Deutsche Telekom, etc. Who knows? You know, maybe this, maybe we're going to come under £1. We're going to come lower. We're going to find ourselves down there at 80, 75p. But that move on the 4th of March, there's the probability in my book that that could go to at least 120 plus is there, but you've just got to be patient. Yeah, I think it will probably remain as BT. Post-Brexit, I don't think Deutsche Telekom are going to come in and who knows, who knows. But all I'm interested in the price action, and I think if we tap 120 and we break 120, I think that will potentially explode. Of course, you could tap 120, close lower, and then that'll will lose their footing. So whichever way we come out of this zone, whichever way we come out of, I'll recolor it. Um, yeah, I can't do it for now. But whichever way we come out of this zone, in fact, let's take this bottom zone out. Yeah, if we're able to break that high, that grey high, I think that could do really well. Palladium. I haven't looked at palladium for a while. Um, right, let's look at wisdom tree palladium. Right, okay. This is yet another interesting chart. Yeah, I mean it's got potential. I think it's worth a shot, but I wouldn't hang around if it closes under 77. I would try and buy a dip. I would try and buy some of this lower number. if you're interested. I'd be patient for that to dip. And if we broke that high, I would hold. So I would try and buy the lower of that zone and see if we can close above it. Otherwise, if close underneath that, I would ditch it. But it certainly looks if seeing some volume coming in. Right, I'm going to leave it there now. Anything else you want me to look at? Is there any other stocks? Oh, GKP. Let me have a look at this oil stock. Hmm. I do like the volume in this one. I've seen a decent when it's been dipping into this 90, the volumes have been increasing. So if we see 95 again and that holds, I would be a buyer of that one. Because I think this could get back to, I think it could at least reclaim that 180, 190. I think Gulf Keystone is interesting. Right. All right. Thanks, guys. Have a good week. Post in the room if you're looking at anything, and I will try and update you as the week goes along. And